Guys, I saw this as almost classic selling on the news. We've had a mega rally in nearly everything when the Fed announced that they were going to do more quantitative easing. We finally get it, and everything sells off. What now from here? Don Luskin, bullish or bearish at this point after the sell-off?
Well, after the sell-off, I'm actually very, very bullish. I think you framed it just about exactly right. This little rally that we had after the election last week and after the QE2 announcement, that was actually on top of 3 months of a spectacular rally. So it was the top on top of a top. It was fantastic. So are we entitled to a little correction? Absolutely. Should we be buying this dip? I really, really think we should. I think with the election last week and with QE2 put together, two amazing pieces of good news that are going to both together prove to be an inflection point, an upshift for the growth potential in the U.S. economy.
Wow. Luskin, what do you say to people who see QE2 and say we're going to get really big inflation because of it?
I say, let's hope we do, because that's the whole purpose of it. Ben Bernanke says that we have insufficient inflation in this country. That's our problem. We are in deflation. He defines the right amount of inflation as 2% a year. We've had well less than that now for 3 years, so we're way behind the inflation trend. We are actually in deflation in this country. And unless we want to follow in the ignoble footprint of Japan and its lost decade plus, we are going to fix that. We've got to have a little bit more inflation.
So if you think we're in deflation,
that is what QE2 is all about.
Do you have any exposure to any kind of fixed income, which if you believe we are in a deflationary environment, that would make the most sense? Would you be buying bonds then, or you think the Fed's going to get it right?
Well, if you believe we've been in a deflationary environment and fixed income has been absolutely the place to be. It's performed brilliantly. And now that we're transitioning into a more inflationary environment, ironically, fixed income is continuing to do well because it is the yield curve that the Fed has chosen to use to create the inflation. It is as though the Fed wants to create a gigantic bonfire, and to do that, they're burning smoke detectors. So the yield curve, which normally warns you of inflation, can't do it.
It's a dangerous game, isn't it, Michael?